Greetings to you guys. Welcome to the most underrated show on YouTube. It's mayhem out there. The world is exploding. Markets are down. Is this it? This is it. This is the dip. We're done. We're just done. Buy the dip, sell the rip, baby. All right, let's see. What are we doing here? Okay. I wonder what gold is doing. Let's look at GOLD. Let's see. Okay. All right, so it's true. It's true that Bitcoin is the new hedge against inflation and chaos in the markets, so that's good. All right, futures are getting crushed this morning, and it's funny we say crushed. I look at this, NASDAQ, everything's down like 1%, the Russell's down too. The Russell's been secretly getting hit lately. Everyone's talking about CCL, so I increased my position in CCL on Friday, and it's down another 5% today, so I have options on this thing at $20, I have it at $15, $10, $5, $2.50, so I'm running this thing down. I'm not concerned about them. What are the other ones doing? Royal Caribbean's down 2.5. Norwegian's down. So it's fine. It is what it is. There's no big deal. Daddy's going to come to the rescue. The plunger protection team is going to come to the rescue. And I'll show you guys here. Let's just go to the holders. These are the guys that are going to come to the rescue. Vanguard, BlackRock, all these big institutions. Let's just click on Royal Caribbean, go to holders. Vanguard, BlackRock, these guys are going to come in, JP Morgan, and these are the people that come in and buy futures. So they're going to Chicago tomorrow morning, and they're going to buy for tomorrow. And I think that by Wednesday, you'll start to see some kind of recovery coming in. So let's look at the yields. These should probably switch later on today. The 10-year is dropping. If this gets into the 1.2s today, that'd be interesting. And if it actually stayed there and closed there. But let's go to the earnings calendar. So big week of earnings. This is really where it kicks off. Usually the banks kick it off, and then everybody else goes. So let's see. I know some of you guys have some stuff going on. Tomorrow is a really big day. Tomorrow's Netflix, Chipotle, United Airlines, Halliburton, Philip Morris, Ally, Sleep Number, great beds. They have great beds. Verizon Wireless, Johnson & Johnson, what the hell? Coca-Cola, Texas Instruments Wednesday, Thursday, Twitter, Snapchat, Intel, American Airlines, AT&T, Southwest, Cleveland Cliffs, Biogen. That'll be a good one. There's more news about Biogen this morning, but I won't bore you with it. And then Friday, American Express, Schlumberger. I know people in the Bidnest Nation got that going on. So let's get to some news, and then we'll have a lot of time for charts today, and we'll go from there. So where did I want to start? I wanted to start with what's happening this week. Obviously, Netflix is going to be the big one this week just because, and be careful, guys. I know that a lot of you in the Bidnest Nation have been trading this, so just beware. Make sure you reduce down to a tracker share or put in stops in place or something like that. Just be careful with this. Do not get burned on some kind of crazy earnings announcement. Because as I'm going to show you when I scroll down a little bit, this is people are going to look at this very strangely. So, companies so far and it's been the banks have been topping expectations. They'll come out on Tuesday. We'll start the FANGs tomorrow. So here we go. Netflix said it expected to add 1 million new subscribers for the April through June quarter. The company added more than 10 million new paying subscribers during the same period of 2020 last year during a pandemic. So if people are going to start comparing what companies, why don't you just go back to June of 2019, maybe June of 2018, and try to get an average from there. I understand it'll probably be more because more people have discovered Netflix and actually had it before because of that big bump. But for those to be looking and saying that if they come in at say 980 million, I think you're going to see a big pullback in the Netflix space. So let's see. Netflix has a considerable first mover advantage of nearly 210 million global subscribers. That figure, however, belies the fact that Netflix is approaching saturation in the North American market with 75 million members comprising the 60% of households. So, hey, take that as you may. Do your research on it. But I know we put out a video. I think we're putting out a video on Netflix today or tomorrow, actually. So that'll be good timing. Next, Robinhood. Get ready to YOLO your life away. Robinhood is seeking a market valuation as high as $35 billion in its upcoming IPO. They are expected to go via Robinhood is seeking a market valuation of $35 billion in its upcoming initial public offering. Oh, I commend them for not going SPAC. The stock trading app will attempt to sell its shares around $38 to $42. So have fun with that, guys. And they're going to go under the ticker symbol HOOD. I wish they were going under HODL. That would be so much more fun. Goldman Sachs, Citigroup, and JP Morgan are going to be the underwriters. Look at this. Robinhood's long-standing mission to democratize investing is seen as the main getaway for young investors to access the market. Notice they've said nothing in this article about them screwing everybody back during the AMC and whatever that other thing was, GameStop. And they have not said anything about how they turned out to be not for the little man and this and that. What? Come on. These people that write these articles are half nuts. The app experienced record levels of new young trader. Oh, they've also, I just won't say that part. They're expected to debut next week. So day traders, be ready. Anybody else? Don't touch that bad boy. One of my favorite investors ever, Bill Ackman. Let's see here. Is Gianni in here? Gianni isn't here. Gianni loves Ray Dalio. Gianni, go read about Bill Ackman. That's who you gotta. This guy's the man. Bill Ackman's Pershing Square drops deal to buy 10% of Universal Music. So, billionaire investor, and this came out 6 weeks ago, something like that. Billionaire investor Bill Ackman's blank check company, Pershing Square, said Monday that it has dropped the deal to buy 10% of flagship Universal Music. Ackman's SPAC last month agreed to buy 10% of the French media's crown jewel for around $4 billion. I guess they had discussions with the SEC, and the SEC has come out and said that they're, our decision to see, this is what Ackman said in a letter to shareholders on today. Our decision to seek an alternative initial business combination was driven by issues raised by the SEC with several elements of proposed transaction, in particular whether the structure of our initial business combination qualified under the New York Stock Exchange rules. So they said that they still will be investing, but they will not be investing in the capacity that they were before. And since that announcement, which was June 4th, okay, so June 4th was that announcement, Pershing has fallen 18% since then. So obviously shareholders of Pershing didn't really like that much. But despite the dropping of the deal, Pershing insisted that Vivendi was not being left far at the altar. It has reiterated that it still intends to become a long-term shareholder of the group after its public listing on the Euronext Amsterdam in September. So don't worry, it's going to happen still. Okay, this is an article that I shared with the Bid and Ask Nation, and I tagged everybody in it. So if you're in the Bid and Ask Nation, I suggest you read the article. It's an opinion piece. There's some parts of it that are well written. There's some parts that are not. But what I really liked is that they went at it from the aspect of saying what the Fed was set up to do, what the Fed has done, how they've been good for the country, how they've been bad for the country, how their policies might need to change. But it was just a good article overall. It's very long, so I'm not going to go through the whole thing, but I would suggest reading this. It's called How the Federal Reserve Can Really Help America. If you're in the Bid and Ask Nation and I tagged you, I think you should read it. So he made the point, he was talking about how the car industry took off and this and that, and how basically things have changed since from the Model T to the Model X from Tesla. The Fed has greatly aided in our economic well-being, cushioning us from avoiding economic catastrophe. And yes, it has expanded its influence over decades, particularly in the 1930s and the Great Recession of 2008 and 2009, and probably now. But this guy also said he would argue that those policies are now outmoded and potentially even detrimental. So this article is so long. I don't want to read the whole thing. I want you guys to go and read it. But this is can I post this in the can I post this in here? I don't think I can post links. Hey, somebody post this link. Somebody from the Bid and Ask Nation, find this and please post this in the link. I think it will behoove all of you to do that. Yes, Frontline put out a good documentary on the Fed last week. I saw it I put it in my watch later thing on YouTube, so I'm going to watch that later. But it's very interesting that all different. It's funny how people that I would think that would be for Fed intervention are now kind of saying, oh, maybe this isn't the best thing. So it's pretty neat to see everybody kind of coming in and saying, oh, maybe this isn't the best thing in the world. Granted, we're at unprecedented times and unseen levels of intervention, but hey, it's cool to have a discussion about. All right, Tesla. So Tesla has unveiled $199 a month for the full self-driving subscription plan, but there is a catch. So when you go in now on the website and you go to buy a car, it is $10,000 to add the full self-driving thing. And of course, you don't get that right away. It just says you buy it and it's going to be cheaper now at $10,000 than it is in the future when it's actually out. So the issue is they've had this on their website for a very long time. I know one person who has bought it, and he bought it, 2018, 2019. He bought it, still doesn't have access to it because it's not out there, because it's not hitting the highway safety, I don't know, whatever you call it. All right, Tesla has unveiled $199 a month for its full self-driving package rather than the $10,000 upfront fee, but it could come at an added cost for drivers. Electrek, they're a really good blog. If you're into like EVs and whatnot, they're a good blog. The new subscription plan has reported its new subscription plan on Friday. According to Tesla's support page, there are two options, depending on the vehicle's current autopilot capability. Basic autopilot for full self-driving for $109 a month, or enhanced autopilot to full self-driving for $99 a month, and subscriptions can be canceled at any time. Tesla notes that full self-driving, is not the same as fully driverless technology, and that the currently enabled, okay, this is boring me. Bottom line, let's get to here. Tesla owners who bought their vehicles between late 2016 and mid 2019 were told that at the time of full self-driving hardware was built, they would not need an additional hardware update, and now they do. So that's not good for the company. I also did not really realize, I forgot about this. Tesla, which dissolved its media relations team, did not immediately respond to a request for full self-driving 3.0 costs. If there's anybody out there that needs a media relations team, I think it's Tesla. But hey, what do I know? So if you were, I know I was not planning on getting the full self-driving. I just don't necessarily think it's going to be out there in the capacity. This is kind of like the 5G deal that's going on. But hey, all right, let's do some stocks. I'm going to just show you a couple things on here. So send me some stocks while you're waiting. What else did I want to say? Oh, smash the like button for me. So let's get this over here and let's do, so if you guys want to join our Patreon, patreon.com/everythingmoney, we hit 4,000 the other day. So if you just want to be in the Discord, $7 a month. If you want to have our software, which is pretty awesome, and now it has the iPhone and Android app, that is $25 a month. If you would like to be in the Bid and Ask Nation, that's trading with me. If you're brand new here, we're gonna put up some stocks to trade right now, and I will listen to you guys. But that's $69 a month, and guys, this at the end of this month, this one's going up. It's going up bigger than. It's gonna be a big jump. So if you want to get in now. If you want to do a one-on-one trading session with me or questions about whatever you want to talk about related to trading, Zoom call, $500 for 1 hour. Gets you that with me. I've had people that have done it before with me, and they're doing very well, especially day traders. So if you need that boost, come on over. And if you want to do a consult with Paul, $10,000 for a real estate deal, probably worth it depending on the property you're buying, especially in these unprecedented wild times. All right. S&P is down 1.25. So, all righty. Let's see what we got. Do I have that up? Cool. Give me some stocks. Let's see. Walgreens Boots, CCL, CVX. All right, let's run through these. Let's do CCL first because I have a vested interest here. All right, so CCL's dropped down. I did think that I said the other day, I can't remember if I just said it to the ambassadors or in the Bid and Ask Nation, but the interest was here at the 200-day moving average. So since we were dropping below that 200-day, which we have, I did say that if this thing could break support and just keep falling lower, especially because you have a great downtrend right now. So if you're shorting this, hang tight. I think you'll have support coming down to this $18 range. And we'll see what happens. But I did buy in at $21, $22 the other day. So I have puts at 15, 10, 5, 250. So I really ran the gamut down. And I believe in CCL because I don't think CCL is going anywhere, baby. All right, what do we got next? I saw one that started with a C that I liked. I can't remember what it was. Oh, no, it wasn't C. It was WBA. Walgreens Boots. Walgreens. Ooh, they're in a similar situation. Look at this. Drop below the 200-day moving average. What support line are they at? So they're at support right here, which they've kind of dropped below. I guess you can call it 45.32, but if they fall, they're coming down here, baby. Sub 40s. Sub 40s unless somebody comes in and the institutions pump them up a little bit. Intel's getting smoked lately. Let's see what Intel's doing. Aren't they opening right now pretty low? Give me a second. Let's go over here. Intel's down just about 1% right now at 454.53. Okay. Yeah, they gapped a little bit. So that's something to keep an eye on. They're below there. So look at all these companies, guys. All these big companies. Why don't we go and let's go look at the big dogs real quick. Let's look at Facebook. Okay, Facebook is fine. Apple. What I'm looking for right now is seeing that gap down a little bit. I want to see where these guys are at when it's relation to their moving averages. So now you can see that Amazon's getting close to one of its moving averages. Let's look at Netflix. Netflix, I think. NFLX. What do we got here? Come on. Netflix is dropping down there. And look at this one. With Netflix, you have 25, 100, and 200 right on top of each other. So that's getting a little dicey. Let's look at Google. I don't think that Google's close to, oh, they are. Look at this. So all these companies are just starting to tread very lightly above their moving averages. And before, I mean, it's fine if it's getting close to the 25-day moving average. That's not surprising. But when they start to get close to the 50-day, especially the 100-day, especially the 200-day, that's your big one. That's when you're going to start. That's when you're going to start worrying and see where we're going to start going with this market. Oh my goodness. What is this? Grubhub? GRUB? Let's see what we got here. That is a hell of a gap. Oof. What happened to this company? Somebody clue me in here. So the good news, if there is any, is sometime in the next probably year, this will fill. Actually, I take that back. So this is a good teaching opportunity. So when you guys have a company like, let's see, have they had other breakaway patterns? Okay, let's just zoom in right here. So when you have a stock that falls like so, and you get a big drop like that, this is called a breakaway pattern. What a breakaway pattern, why breakaway patterns are so dangerous for shareholders is because the person that owned the stock up here, let's call it $60, and it dropped down to, let's just call it $16. That is a massive drop. So anybody that held a big position here, all they're saying is if I can get half my money back, I will take my money and run. So as this thing will start creeping up over time, and it'll get to maybe $40, maybe $35, and then boom, it'll fall right back down. Same thing. It'll get back to $35, $32, boom, it'll fall right back down. The point is these people up here, they want their money back. So if they could just get half their money back, then they sell and it drops down. So that's why these patterns are so dangerous. It's very difficult for these things to just make one quick move to the top side. I saw a breakaway pattern in here. Let's see what happened with that one. Give me a second. Let's zoom here. Okay, so this one is not the best breakaway pattern, but let's see. Okay, so you can see that this thing broke down. It moved up, pulled back, moved down. This actually was pretty good. When did this happen? This is not a very good breakaway pattern definition, but oh well. You see my point. Let's go to the next one. Oh, you want to do the VIX? Let's see what the VIX is doing. When the VIX is high. Oh, VIX short term. Let's do the short term ones. VIXy. Is this really where the VIX is? Short term futures ETF. I mean, the VIX has popped a little bit today, so man, look at that VIX. I personally don't like where the VIX is at. I don't like using the VIX as a monitor of what's happening with markets anymore, just because I believe that the stock buybacks that these companies have done, and I think somebody sent me something yesterday. I think it was there's going to be $1 trillion shares bought back in the S&P 500 up to this point this year or in 2021. I can't remember. I will figure that out and talk to you about it tomorrow. But I do not like what they've done with the VIX. To me doesn't make sense anymore with the amount of stock buybacks. It's not a good gauge like it used to be. All right, so this is Cardinal Health. What's Cardinal? Cardinal's staying pretty. If this is true, what's happening right now? Cardinal's pretty good today. It's holding tight. It's given some relative strength. Why don't we go to the 15-minute chart of Schwab and just see what is going on with Cardinal? Okay, Cardinal's flat right now. So let me talk to you guys. Let me teach you again. So when you have a day like today where you're getting smoked in the market, the stocks that I like to look for are what are called relative strength. And what relative strength is strength of a company relative to what the market is doing. So if you have the S&P down, whatever it is, 1.25 right now, and you have a company like Cardinal Health that is not being impacted by that, that's a company to keep an eye on. There's strength. That means that there's buyers in that stock. People want to own that thing, and people see something in it. So when I go through and I want to look for companies that are barely down or barely up or really up on days like when there's big down days. So Cardinal Health is a relative strength one. We own this one in the Bid and Ask Nation. So this gives me a lot of confidence to say Cardinal Health is going to do well. I've been saying it for a very long time. It's just going sideways. Eventually this red line will start to move up. All we have to do is get through these moving averages. If we can get through these moving averages, get above 50, let's call it $58, this thing will do very well. I promise you that. Okay. Neo, please. Let's see what Neo's doing. Oh, that's not surprising. So if you're a Neo, guys, smash that like button for me while you're at it. If you're a Neo, you should be worried because today you were holding so well at this 200-day moving average, and you drop below your 50 and your 100. And look at this. So, guys, big downtrend coming. You gap down. Your next support level is, I guess you can call it right where it's at. I just randomly drew that line. Then you have $35, $34. Then you have $30. So that is not looking good for you, coupled with the fact that you've dropped below the 50, the 100, 200, 50-day moving average. You're in some trouble there. So gold, guys, I don't like trading gold, but if you want to look at gold from a just perspective, I don't like it because it just moves around so quickly, but you're below all of your major moving averages. Not ideal. Eventually this thing will get going. Don't worry. Gold's a 3 to 5 year play in my opinion. Okay. Early Neo. Oh, let's look at Tesla. Somebody said Tesla. Let's see it. They didn't ask for this, but I want to look. All right. Look at this craziness of Tesla. Oh, if companies could just be normal. All right. So here you're sitting. It dropped down below its 200. It was already below its 100. That happened on Friday. Today you drop below your 200. If this thing drops below its 50-day moving average, look out, because I think this thing will start coming down to the mid 500s. So you have an uptrend right now. I do not think that'll continue. The volume is actually slowing down quite a bit on Tesla for it being Tesla. And let's see. NVIDIA. There was a lot of people in the Bid and Ask Nation that made a lot of money on this. I have to think this is getting hit today a little bit just because it's tech. Yeah. So let's go 3 months on this. You drop below. You're starting to move towards these moving averages. If you're in this thing, to me, I'm getting out of this stock. You don't have to, because your red line is not below your you're not in the sweet spot yet going to the downside, but I'm not loving it. And I've had this incredible run. I'm moving back. I'm selling this thing. That's it. I am exiting this position. And hey, if you exit and you get a pop and it comes up here, go ahead and add back to it. This is where people start to worry. They think, okay, if it comes down here, should I exit? And if I don't exit and it comes down here, then I'm really mad. If I exit and it pops up here, then I'm really mad. You have to condition yourself to be comfortable with being safe, being conservative. If something jumps up here, okay, so you missed it. You missed this. That's it. It is what it is, or you missed some kind of recovery. But I would rather be buying in some kind of good space where I'm going to get engulfing candlesticks like that than holding my breath and hoping this comes up here. And more times than not, it's not going to. So, all right. Corsair. Everyone's asking for Corsair. Let's see here. Corsair Gaming. So it's holding a very strong support level right now. Now the issue is this is pretty brand new stock, isn't it? They went public when? They went public in September. So it's almost there, but oh yeah, you've actually dropped below your support level of about $29, and this is a crazy downtrend. So guys, there's not much support in here until you get down to this 25 area. So be careful with that if that's your stock. Just make sure you have stops in place, because you're down another 2.5% right now on it. So let's see. WEC. Oh, that's right, Nick. Good call. I forgot that there's a stock split coming with NVIDIA. So the thing about NVIDIA and stock splits, it's really a psychological thing. I think NVIDIA, let's call it was $700 a share. I think they're either doing a 5-to-1 or 7-to-1 split. I can't remember. Let's call it 7-to-1. I don't know what it is. It's not 7-to-1. Maybe it is. Maybe it isn't. But please do your research on this. If it's 7-to-1, that thing will drop to $100 a share. The psychology will look at it as, ooh, that's an affordable stock now because it's $100 versus $700 a share. So people will go in and maybe you'll get some forward volume into that thing to the top side. So WEC, let's look at this. I know OPEC did some stuff today. I don't know what this is. It just says energy, but they're above all their moving averages. That's good. If you get an engulfing candlestick like that, taking out the previous high of Friday, like maybe $96, you can go ahead and do something with this. But please wait till this gets into the sweet spot. Let the red line and yellow line get into the sweet spot. So don't just add it on an engulfing candlestick. I take that back. Let those get in. And I like the volume that you got coming in here. That's wonderful. All right. Oh boy, 4-to-1. Thank you, 4-to-1. So it's 700 divided by 4. Actually, let's just figure out what the price is. $717 divided by 4. There's your stock price. All right, everybody wants Alibaba, the daily Alibaba. Gap down, not surprising. It's tech. Things are getting shut down in China. Plus, there's some strife between China and US about blacklisting companies, this and that. So they're below all their major moving averages. I think they have more room to fall. Let me zoom out just a touch here. I want to see where the next support level is. So right now Alibaba is kind of holding this level right here. If it has a lot of support in here and here and here. So I wouldn't think this thing's going to fall very low. If it falls and it gets below this 170 number, look out. But I don't know. It's not going to happen right now. If the market falls apart and starts moving, yes, I think it'll happen. But it's not going to happen right now. All right. Oh, by the way, breaking news. So I read the 10K on Alibaba. I found that they use an auditing firm that is not Chinese, but they have branches in China, and that is who they use to do their auditing. So I'm not completely sold. This is the same route that Luckin Coffee went to, and I would have said, I've been saying, is it likely that Alibaba turns out to be a Luckin Coffee? Probably not, but I said the same thing about Alibaba. I said the same thing about Luckin Coffee. Luckin Coffee was all over MSNBC. I mean, not MSNBC, CNBC, Fox Business, Bloomberg. Every single day, it was the greatest thing since sliced bread. They were going to take out Starbucks. They were going to be the global competitor to Starbucks. And then, boom, it was all fake. So it can happen, guys. It can happen to big companies like that with big names. So that is, just be careful with that one. And please, if you want to, double check me. I'm happy for you to double check me. Tell me about it in the BidNast Nation. I want to talk about this more. We had about a 30-minute conversation about it on Friday. So that was that. There was one more. Let's see. Okay, I'm going to do the last one. I want to do United Airlines right quick. So United's getting hit pretty big today. United's a really good 50% stock. This is all overhang, and you can see that couldn't break through again. So you're down below your 200-day moving average. This chart looks exactly the same as Carnival Cruise Line. I have a feeling you'll get down to the 40s. And yeah, that's about it. So, all right, guys, you have a wonderful day. Join the BidNast Nation. I'll talk to you about more stocks, and have a great one. Bye.